Morning all. Sorry, I was just mucking about. I'm back. How are we doing? So I haven't got my chat open. One sec. Morning, Adrian. Morning, Eric. Morning, Diamond. Morning, Warren. How are we all doing? 7 minutes to the open. Morning, Wilson. So this morning I've got the ORB EA set up on aggressive mode. It's only on $200 risk, I think. Actually, let me just check that. Oh, that's the NAS. Let's not look at the NAS because we're not trading the NAS. We're trading the DAX. 250. No, 200. So I'm using $200 risk on a 150% of the opening range. Try and get this evaluation over the line this morning. Got trailing stops on. Very tight. We've got a really big opening range this morning, pre-market opening range. So this is actually more like a normal opening range breakout. So not sure this morning, but we will see. So closed out a little bit this morning on, so I got an ADX on there. I was just looking at an EA for someone. Get rid of that. Closed out US dollar CAD this morning. I'm flat on that. Now I have taken the EA off this as well. So the EA basically, I am reducing, morning Chris, the exposure on this basically. So there's the US dollar CAD trade there that I took off this morning to bank that. EA is pretty much only running on 4 pairs now. It is only running on 4 pairs. If my VPS will wake up. What the hell? Whoa, weird. So I'm running Euro Swiss long. I haven't got any trades on. Running New Zealand dollar CAD long. Haven't got any trades on. Pound New Zealand, I took first entry. Pound New Zealand, I took first entry yesterday here on this reversal alert we had in Asia. CAD Swiss, I'm short. Pound US, I'm short. So I've just got those running. And basically, as we close these out, in profit and I just get out of them, basically I'm shutting the EA down on them. So because I'm getting close to passing now, so I don't want to get any more risk on. I'm just going to let the opening range breakout hopefully get me over the line on it. Morning, Andres. So news today, big day. We got the Canadian GDP this afternoon at 1:30 pre-market. So an hour before US opens, we've got the Canadian figures coming out. And then just after market open, we've got the PMIs. And then just after that, we've got consumer confidence. So there's US dollar news 15 and 30 minutes after the open. So it's going to be a tricky New York this afternoon because obviously, literally, as soon as we get that 15-minute opening range cash balance in, we've got news hitting, which is going to drive the market in a direction. And then 15 minutes later, we've got more news hitting, which is going to drive the market again. We don't know which way, obviously, it's going to go. So it's going to be a tricky open this afternoon. I just hope I've passed this evaluation. I don't have to trade it, to be honest, because I don't think it's going to be a fun one. Might be a mental one. It might go. The beauty is if you take the opening range breakout, whether you take the pre-market or whatever you take, and it goes that way, and you're in profit, and then the news hits and it pushes it, and then the second news hits and it pushes it, you're going to have a monster day, aren't you? So it's going to be a busy one. But GDP for the CAD, I've got Canadian dollar short on in the form of the CAD Swiss. So I'm hoping today, not nasty Canadian dollar, but I hope your GDP tanks. And it comes out as a negative because I want the CAD to come down. But got close to a TP on that this morning, but didn't get it off. Still got it sitting in profit. So basically I've got 0.8 in drawdown. I am 0.6.5 away. So I need to bank 1.4% on this morning's opening range break. That's the target, 1.4%. So if I can do that with the pre-market opening range, happy days. I'll just shut everything down and I'll trade the next step of the evaluation this afternoon. Morning, Freeman. Wilson, bought the ORB EA, and besides a couple of pairs, I intend to use it as originally intended. I also have an idea to use the EA to target gap closes on the DAX and the NAS. Yeah. The whole point of the, I mean, if you've bought the MT4 version, if you want to do gap trading only, there isn't one this morning. Well, there is. It's very filled, isn't it? Basically, it just looks like they've done the gap fill this morning. But if you want to trade opening range breakout gap fills, basically you can do it by setting, if you've got MT4, this is by setting the long and short direction. So you can say, just I only want to go for the gap fills, so just take me in long or short. If you bought it for MT5, you can't do that because MT5 doesn't do it, because MT5 is not as good as MT4. End of story, in my opinion. But anyway, would it be possible to add the update to the EA to target a specific price? No. The whole point of the opening range breakout EA, the whole edge of it is that you do not target price. Yeah, it's a breakout, trend breakout, range breakout EA. You cannot use a TP. Anybody that runs any kind of strategy that is trend based or breakout based, that anybody that runs that type of strategy with a TP is mad. Mean reversion, you use TPs. Trends, you don't use TPs. The whole purpose of getting on a trend is riding the trend. Yeah. If you get into a trend there and you set a TP at 1.5 or 2 to 1, you've missed the trend. The whole point of it is you want to ride that. If you set a TP, you're just completely killing your upside potential. If this thing's going to run 15 to 1, why would you get out at 1.5? Crazy. Trend strategies shouldn't use TPs. They should use some kind of exit strategy or trailing strategy. Mean reversion should always use a TP, because mean reversion, you're only trading a pullback percentage. So no, the answer is no. Because the edge won't be there. If you use a price point, it just won't. The edge will disappear. So there's your 15-minute opening range, which is 30 points. That's not good. I'm not very confident on this opening range this morning, I have to say. We'll see what happens. So having a quick look at the DAX. Yesterday, it's a big drop, isn't it? What was this? I'm interested to know why that went in before the market opened. They're enticing longs, aren't they? Which always worries me because it means they're going to go short. So yesterday, again, another really tricky session for the DAX. Look at these bodies for the last 5 days. Yeah, this is the market not wanting to go anywhere until we have all of these inflation numbers out. There's just no direction. They're not interested in taking any direction. Look at the wicks. Wick, 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 wick. Huge wick, wick, wick. All we're doing literally is rotating every day. So we're in 5 days of rotation now. This is day 6. How far are we going to go down or up today before we come back to exactly where we started? That's literally all the market is doing at the minute on the DAX. The other indices are a lot more organized, but the DAX is confused as hell at the moment, isn't it? Really tricky. So we've been sideways now for what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, 2 weeks, over 2 weeks now. We've literally pushed up. At the end of that 12-day run, we went sideways for 12 days. Not easy, is it? This is why we can't use directional bias from the previous days, because it means nothing. It looks like I'm going to go short. I was trying to anyway. So this, we've got 2 propulsion gaps pre-market. Push, accumulation, push. So the buyers seem to be stepping back in at the point of origin of this move at the moment. There's a lot of limits triggering off down here. I'm not quite sure what caused that. Oh, yes, I am. It's the French. PPI. Positive. Yeah, so it's bullish index this morning. So they are buying it up. I use MT5, unfortunately, due to funded account. The idea... why are you using MT5 on a funded account? I'm on a funded account. I'm using MT4. You're with the wrong funded. You're with the wrong prop firm. If they're forcing you to use MT5, move. Unless you want to use MT5, obviously, then it's fine. The idea of using the A with a TP is due to back-tested results on closing the gap only. Yeah, well, if you want to do that, you need to buy a gap fill EA or build one. Gaps fill 50% of the time. Therefore, the edge isn't there. Yeah. I've tested it. There is an edge there in that you know where it's going. The edge, though, is 40. I think it's 48%. My testing was. There's gaps fill 48% of the time, same day. They will fill. I'd have to look my research up, but it's 78% of the time within a week, and then we're up in the 90s for them actually getting filled shortly after. So if you're looking for an intraday gap fill edge, it doesn't exist. The only way it would work is if you are far enough from the gap where, however you're getting in, to give you a risk reward, but you're only ever going to get a 50% strike rate with it, and you will find that the risk reward won't be there enough, I don't think, to do that. I've back tested this. I've built a gap fill EA. But yeah, I don't think you're. I don't know. Yeah, if you got Wilson, there's a page on my website here. Need a strategy? I'll code it for you, and you can buy it if you want to test it. But I need all this information from you. Detailed description. I want an EA that trades gap fills. I want a detailed description. If it's not more than 1 page of A4, I'm not even going to look at it. I want detailed descriptions. Exactly how's it getting in? What risk methods are you using? How is it break even and trailing? Where is it setting the target? What indicators are you using? How is it filtering? Blah, 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 blah. I need info. I don't want you to send me... Somebody sent me a video yesterday, which is fine. But I can't sit there and watch. This one was a good one, actually, because it was a Larry Williams one. It was only 2.5 minutes long. But if you're going to send me a YouTube video to watch to learn a strategy that's 1 hour long, I ain't doing it. I haven't got no time. 5-minute opening range is in. And we are basically just tap the top of it on the 10-minute. I think I'm going short by the looks of things. I don't think these buyers have got enough legs this morning. We'll see. They certainly bought that up again, didn't they? Morning. Was there anything leaked with that huge pre-15-minute candle? Yeah, well, that's what I just looked at, Ladder. It was the French CPI figures. PPI figures. These don't appear on Forex Factory, which is why I wasn't aware of them. They're not that important. They are important, but they're not that important. Anything that is... the difficulty with trading figures on the euro is there are too many bits of the euro, isn't there? There's lots of... We've got the Germany, France, Switzerland. There's lots of parts in the euro, not the Switzerland, because that's the Swiss franc, it's the same currency. But so they don't get classified as red news. I think the German ones are the most important ones because they're the biggest economy. Morning, Shroud. Morning, Tom. So we just tapped out the lows. Buyers are holding pretty well at the minute. Right, well, that's not moving much at the moment, is it? So, ADRs, let's cover the ADRs and the dashboards. Basically, there's no ADRs this morning. Asia's been pretty quiet. If we look at the Aussie pairs, not a massive movement during Asia. Bit up and down, but obviously way within ADR. So there's nothing really moved dramatically this morning. There's nothing getting anywhere close to ADR yet, really. Weekly ranges, obviously, we had a fairly quiet day yesterday. So we had the only ADRs we had yesterday were oil, and I think it was Euro Swiss, wasn't it? Hit ADR yesterday. 730, 73. Yeah. So yeah, Euro Swiss. I think there was one other, maybe Euro. I don't know. There was a couple ADRs, nothing much. But obviously Euro Swiss, if you look, that was a nice ADR reversal on Euro Swiss yesterday. So that was ADR up here. And you got a reversal alert there. Lovely short. But that was really all. I took an oil long yesterday at ADR, and it's still coming down again this morning. So this was ADR. Annoyingly, so we had this ADR push. I got in here. Annoyingly, I could have got out there with about 0.25%, and I didn't, because I was expecting this to be, this is a propulsion gap on M15. I was expecting that to be the support. And all we did was we traded straight back up into the London high and then tanked. And we're coming down again this morning. So I will look at oil in a minute. I need to manage that as to where that's going, because that's taking me a little bit into DD. Not a lot. It's only 0.3%, but yeah, annoying. DAX, I'm short. So reduced risk straight away. This is a very whippy open today. So as I say, the trouble with this pre-market opening range, obviously, is it's big. It's almost as big as the opening range. It is as big as the opening range. In fact, it's bigger. That's your 10-minute opening range. 15-minute opening range. 15-minute pre-market opening range is actually bigger. So it's done a lot of volume pre-market. But we'll see if we can get that drop out the bottom. So oil yesterday, we'll have a look at the buyer scorecard and retail, etc. CAD Swiss, still massively long CAD Swiss, look. And that New Zealander CAD, they're massively short. So we'll have a look at all that in a sec. So oil, basically still looking for this market structure move higher. So again, you know, this is, I was expecting maybe a support here or a sweep here and then a bounce. We didn't get that yesterday. So this is the propulsion, where's the propulsion gap? That one there, you can see it on H4. Look. That's where I was basically getting in on ADR, expecting a bounce, and I got the bounce and stupidly didn't take it off, which is really annoying because that would have really helped today. So this one's just taken me into drawdown, unfortunately. So if we get a pushback down into ADR today, it's going to be this level here. Oh, that's nowhere near, actually. Sorry, that level there. It could bounce there as well, actually, thinking of it. Yeah, actually, that's a really good resistance. So we've got a nice support resistance here. So potentially we've got a bounce point there. Failing that, we're almost at ADR again. Hopefully we're not going to come back down and try and retest these lows and form a range. But if we do, this is the propulsion gap here that started this leg up. So here is kind of the ultimate low. So I'm not quite sure why this is coming down quite so hard. We have got OPEC tomorrow. We've got OPEC meetings all day tomorrow. So we will get news out of the oil markets tomorrow. So this might be selling off because they know something's coming. I don't know, but we'll find out. I will scale out of it if I need to. But half an ADR on this is 13, well, 100, 130 basically. So anywhere down below this line in this section here, as soon as we get a reverse alert on M5, I'll be taking the third position on this to go long. In fact, I haven't got the EA set up on this, have I? No. So I'm taking these manually. So in that case, what I will do, I'll set a pending down here. 120. Actually, no, I'm going to wait for a reverse alert. I'll wait for a reverse alert on it. So yeah, so wait for some signs of strength to come through on that one. Morning, Frank. If I haven't said Frank all morning, or Frank all morning already, Frank even. The 15-minute opening is within the pre-15 range. Do we adjust our entries to the opening range? Up to you. However you want to do it, basically. There's your 15-minute pre, obviously, which is what I'm trading. The 15-minute open is actually this candle here that we're on. So that's the 5, 10, 15. So it said just the 15-minute opening range is just slightly larger than the pre-market and ever so slightly lower and inside at the high. Not a lot in it, is there really? I don't think it really matters which way you go. The 15-minute pre is a different strategy. The idea of the 15-minute pre, and I didn't take this into account on the DAX, looking at news releases, and obviously they do have news releases 15-minute pre-market open, which is really annoying. But the whole idea is to trade a tight range breakout on the cash balance. So the initial cash balance candle is the big one that makes the opening range, usually, which in this case is this one here. And what we're doing is we're trying to extract a 2R-ish return out of that candle in 5 minutes. When you've got that, obviously, the EA really is just treating this like a normal opening range, isn't it? So it's kind of reverting to the standard strategy on this, which means you get fairly small entry sizes because obviously when we're getting in on a tight range and we're going to be taking sort of 10 to 20 lots at a time. I'm only taking 4 today because of the size of that OR. So yeah, ADRs, obviously there was nothing this morning. RSIs, we'll cover the RSIs while we're waiting for the DAX to wake up. Let me just, I've got my screen open with the DAX on it. Let me just stick the DAX on there so I can just watch this as well at the corner of my eye. So RSIs, there's no 4-hour RSIs at all at the moment. We're in contraction. So all this news we've got coming this week, this is the mother of all weeks for news. The market doesn't seem to want to go anywhere. So remember I said yesterday, we get one of two things happening on news weeks like this. We either get really strong Monday, Tuesday moves, ADRs all over the place, where they're reaching for liquidity or positioning themselves ahead of news in the direction they expect the news to go. Or we get a fairly whippy sideways Monday stroke Tuesday ahead of the FOMC. So it seems to me at the moment we're having a fairly sideways one with most of the pairs, which isn't a bad thing because it does allow you to get out of your positions. So we've got US dollar strength. Yeah, we've got strong US dollar this morning. So yeah, so we didn't get a massive amount of movement, did we, yesterday? Everything was within ADR. So I think we're going to get a similar sort of day today. So you want to watch any strong movements you get for possible mean reversion opportunities today. DAX stopped me out. So stopped out in that first entry. Not just a small loss. Only $130 odd. So we'll see if we can get a second bite the cherry on this. So as we're closing back inside the 15-minute pre, we're going to get a second pending on. Assuming we do close back inside the 15-minute pre. So yeah, RSI's Aussie dollar yen on the hourly extended to the downside. So we are really, really sideways on this Aussie yen at the moment. So this is day 6, 1, 2, 3, 4, 5, 6, day 6 sideways after this big, strong push up. So looking at the Aussie dollar yen on a higher time frame, you can see obviously it's been very, very, very erratic. You know, we get news and intervention followed by mean reversion, followed by strength, followed by mean reversion. It's just got no direction at all. We've broken above the origin of the move, and now we've come back down again. So, you know, there's just no way of telling where this thing is going at the moment. The yen is obviously, the market is short. The commitment of traders is, I think it's 70% short on the yen. 64. So there's 64% short on the yen. So, you know, in theory, the market is positioned this way. Now you can actually see intervention, market push. So the market structure is bullish. Yeah. So COT is telling us to go long everything against the yen. Market structure is bullish. But right now, we're obviously expecting to make a new higher low somewhere. Who knows? Anywhere in there, we could put in a higher low for the next leg up, assuming that COT is right. So it's difficult to trade this one. If you're going to take an H1M5 trade on this long, you've got to obviously see, you know, we're doing a double bottom here at the moment, but the way this has been working like this, why am I not got a second pending coming? Sorry, one sec. Oh, look at that. Closed just outside the opening range. I'm going to put a manual on this. I'm just going to enter a manual. If this, if we close back up inside the opening range again next candle, I will cancel this manual off. But I'm just going to take a manual short on there. It's an IRB as well, so I like that. It's a short still. Lovely rejection to the upside. So yeah, you've got to be careful with this. It could well just go from there. We could just go basically push accumulation break. But if it's going to pull back, you've got an awful long way to drop. So you've got basically a 3 ADR move here. Anywhere in there, it could find support. And if you look at this, there's very little places in there for support, isn't there? You've got a little accumulation in the middle there. That level there and that level there, which is pretty much where we are. If that breaks, that's your only hope. And if that breaks, you're looking at that somewhere in there for the market to actually find some buyers. It's going to be really, really tricky to get into. So I don't really like the look of that at the moment. Aussie dollar, US dollar, extended on the hourly to the downside. So if we look at the buyer scorecard on these, Aussie dollar, US dollar is a massive sell. It's the biggest sell in the universe at the moment. So it's coming down. So up to you if you want to mean revert this. You're fighting the bias. You're better off waiting for it to pull back up into either that level or somewhere around there. Anywhere around there, really. So ADR hits to the upside, I'll be looking to short it. If it pulls back up into here, anywhere, I'll be looking to short it. But the short was here last week. There was a short on Thursday last week. That was the last reversal, market structure reversal, and it's just come down since then. So it's very extended. But yeah, you are fighting bias on that. You've got COT all short. There's no retail sentiment either way. And also, just bear in mind, anything you take today, if you are considering holding it for anything more than a day, remember what we've got coming up. Yeah, tomorrow. CPI on the euro. I've got the PMIs, got JOLTS, FOMC, Fed rate. Yeah, all US dollar. Huge US dollar moves. And then we've got the rates for the euro and the pound coming out an hour apart. This will affect the dollar. Yeah, as repositioning happens on the euro and the pound, money will be extracted from or added to the US dollar to get into these positions. So everybody, the world trades these currencies against the US dollar. So whatever happens with these rates will, of course, affect the US dollar because they will be trading against the US dollar with them. So you need to be careful of those as well. And then obviously we've got unemployment, which is one of the 4 key leading indicators for fundamentals on Friday. So anything you get into US dollar wise like this, bear in mind if you're position trading it, you've got 3 days of potential 200-300 ADR moves ahead of you. So just be a little careful. I might just add to that short. Oh, sorry, can't remember what I set my trailers at on this. 200. Trailing on close. Yeah. I'll leave that running on close for the moment. I'm just going to watch it. I'm not going to get 1.4% out of this, am I? That's an annoying stop out, that was. Unfortunate, that stop out, look. Never mind. So if you are trading the 15-minute post-market break, you are in short from here. If you're trading the 5-minute break, you're in short from there, depending on obviously what your stop is, your whatever you are. I'm not going to add to that at the moment. It's too extended. Right, other RSIs. So Aussie dollar, US dollar. Then we've got the pound odd, also extended. So just be careful with that. Be careful with everything this week. You know, whatever I say in here today, whatever we look at, it means nothing. Tomorrow and Thursday, everything changes. So if you're trading anything today, I would be looking with an intraday maximum 1-day hold on anything, because you know the ideal with any of this is, let's say for example you do want to take this RSI long. If you take this extension on the next reversal alert, so if you drop down, yeah, so we're looking at H1 M5 here, aren't we? So we're looking at H1 RSI extension, M5 reverse alert. So if you get in here, what you want by the time we get to tomorrow evening is you want this thing to be up here somewhere so that you can break even this, right? So we want it to have moved up back into there somewhere, at least, if not a bit higher, so that you can break even. And then if you want to, hold it through FOMC. Yeah, if FOMC makes this thing go mental that way, happy days. If it comes back that way, no problem. But you can get yourself into a position and hold it with a break-even stop. And basically, you got a 50-50 shot tomorrow of banking a huge return or not making any money. Either way, you're not going to lose, are you? So the idea with any trade that you put on today, you've got two options. You either are trading it intraday with a view to getting out by the end of today, or at some point tomorrow, or getting into a position where you are above a break even. So if you took the RSI extension here, H1M5 here, it went up, then it pushed back down and invalidated that low. Yeah, take a second position. And if it comes back up, and as long as you're above break even average tomorrow, by the time the FOMC is released, you're fine, aren't you? So just bear that in mind with anything you look at and take today. You've got to be mindful of what's coming up. We've got some massive moves coming on the news. So got to be careful today. So pound odd, pound odd, yeah, sorry, is the other one. So again, H1, oh, I've missed it. Well, I haven't missed it. No, sorry, you've just literally had the reverse alert 10 minutes ago. So reverse alert's just gone in. That was a big reverse alert because that was a huge push up pre-London Open. And again, for those of you, those people that have been looking at trading the ORB EA on Forex pairs, this is the reason it's not very effective. Yeah, market wasn't open then in London. We weren't open. However, we got a huge move. So you can't, there is no time moves start in the London session. The London session starts somewhere around about 8 or 9 in the morning, depending on when they finish their coffee and press the button on the big orders. Can't time it like you can with the indices. But yeah, you got a really late reverse alert on that because of the speed of that sort of 25-minute rally. So there's your H1 RSI extension, straight out of propulsion. Yeah, so that propulsion gap, accumulation, break. So that propulsion gap, sellers have stepped in, added to their positions. So we need to see if there's more buyers here. If not, those sellers should step in and hold that down. But speed of that, I would say we probably want to pull back a little bit more. Don't know. Might not. Never know, do you? But if you're going to do that, if you're going to position trade it, get in now, plan your entries. Yeah, so where we are now, look at roughly half an ADR, which is 86. ADR today, take a second position, third position up there somewhere, fourth position up there somewhere. If we get up to around about 175 ADR, which would get you into 4 positions if they were half an ADR apart, if we got a reversal alert exactly on that level, which isn't going to happen. So realistically, you'll be in 3 positions by then. You will have done over a 50% pullback on the move, ready for the next leg down. Pound odd is a sell. No cop bias, no retail bias. So it's just fundamentally a sell at the moment. So, so that looks pretty good. And the only other thing we've got is the US dollar CAD, which I'm already in. Oh, no, I'm not. I'm out now. Sorry, I'm out of the US dollar CAD. So I got out of this one this morning. Still going. I took 2 positions off of this. That one and that one. So that was the initial reversal alert on the hourly extension. That was my second position, the add, which was 50 pips. 44 is half an ADR. So we got a reversal alert on it yesterday. On Friday down there. So took that one off yesterday and took this one off this morning. We're coming back up. There's my TP on the initial order, which was in the propulsion gap, which is where we're testing now. Out too soon on that one. Again, US dollar CAD is a long, basically. It's one of the strongest buys out there at the moment. Cot on side, retail offside. And you've got fundamentals on your side on the US dollar CAD at the moment as well. Now, that again can change today. Today, we've got the GDP figures for the CAD. So these figures here for GDP may change today and give a bias to the CAD. And we'll see what happens. We don't know what's going to happen, do we? But either way, I'd rather be longing it than shorting it. So it's an RSI. It's very nicely extended. I mean, if you look at this on the hourly, where we are, yeah. So That's highest point in the last couple of months. Yeah. Sort of there, second position down there. So looks like a good mean reversion, but a day before FOMC, up to you. How big are your kahunas? Basically, do you want to be shorting the US dollar ahead of a rate increase? Very difficult to tell, isn't it? We'll be able to get a bit of a clue this afternoon. We've got consumer confidence and PMIs, and we've got obviously main PMIs tomorrow. So that's all coming out ahead of FOMC, but it's you know, you kind of you're riding a bike on a train track at the moment with a train coming behind you. You've got to pedal fast. You've got to be in and out quick. If you mean revert this today here, and it does that, I'd be out today. Just you either get it out or don't try and build a position ahead of FOMC. If they take this thing skyward 200 ADR, you could be stuck in this for a week, 2 weeks, a month. We've no idea what's going to happen with the US dollar this week. It's going to be a big change potentially. Might be nothing. You know, we don't know, do we? This is the whole thing with the markets. If we knew what was going to happen, we'd all be millionaires. We don't know what's going to happen. Nobody does. No strategist in the world, no one in a bank or institution has a clue where this thing is going. But what they do know is how to manage the risk on it and not to get into huge potential risk positions ahead of a fundamental shift event, which is basically what we've got this week on Wednesday and Thursday and Friday. So, you know, all week. So there's your RSIs. There's a few opportunities, but as I say, you got to be pretty nimble today. DAX have just got out of with break even. Not having much luck this morning. So broke even on that one. Just took the liquidity down at the lows there, look. They bought it up. So we're sitting in propulsion. We need to see if these sellers are going to add in here, but not very directional this morning, is it? Obviously, it's a big sell at the moment, but looks like I might have to wait until this afternoon. Right, so having a quick look at the buyer scorecard. There's not a lot changed, obviously, on that because we had no news yesterday. So it's pretty much the same as yesterday across the board. I'm not going to go through every pair, but obviously you can see what the main buys and sells are. And you can see, obviously, whether you have COT on board and whether you have retail trading against. So anything, obviously, the pluses are all longs, the minuses are all shorts. So that's obviously what gives us our overall bias with the fundamentals. So it's still pound US dollar as a good sell, Aussie dollar US dollar as a sell, pound New Zealand as a sell, which is what I've just got into yesterday. So that's the only new position I took yesterday, pound New Zealand short. So we just had a reverse alert on that this morning. Almost got back down to my entry. So yeah, shorting that. This propulsion's held up very well. See what I mean? We've got this evening on the New Zealand dollar, we've got the unemployment rates. Again, leading indicator in the buyer scorecard, unemployment. We've got this propulsion gap where we had that move on the previous New Zealand news. They're buying it, still buying it up, but they're unable to really make any progress. Every time they buy it up, look at those wicks. Yeah, that doesn't tell you there's bears sitting up here holding this down. Nothing does. Yeah, we can't get through there. The buyers are here. So this is your battleground. When this breaks, this is going to go on a multi-day run. We just don't know which way it's going to go. We've got the interest rates coming out. So no market participants. This is what's called an area of balance. This is where buyers and sellers are happy to transact and will continue to transact until somebody tries to price discovery at a different level. So we will continue to do this until we get the rates on Friday, Thursday, even. In all likelihood, we may try and get a price discovery move before that, but I doubt very much whether it would get out. So I'm playing it short back down into here. And what I'm hoping for really, we had massive negative press this morning in the pound. The IMF came out. I don't know if that was the news. We didn't cover it this morning, did we? The IMF came out overnight and said they've downgraded the pound. I haven't got any news going back. I'm not sure what time the IMF actually said it, but there we go. Yeah. So yeah, it's not in red, the actual specifics they said, but basically, there we go. The UK economy would contract by 0.6 in 2023 compared to the 0.3 growth anticipation in October. So basically, there's a graph running at the moment which shows you the growth at the IMF. Worth looking at the graph, actually. There you go. So this is obviously the G8, 7, however many you want to put in there, depending on whether you like Russia or not at the time. So this is basically, in a nutshell, this is recession prediction. Yeah. So are we going to go into a recession or aren't we going to go into a recession? Recession, in a nutshell, is a GDP contraction. Yeah. Gross domestic product, economy shrinking. The UK is the only G7/8 member that is predicted this year to make an economic loss. Yeah. Compared to where we were expected to be a 0.3, still the worst of the bunch in October last year. Now they're predicting over 0.5% contraction. Yeah. That is going to be hugely negative for the pound. People are not going to want to put their money into a contracting economy. They're not going to want to start businesses in a kind of contracting economy. So this should have a negative impact on the pound. And the next time we get GDP reports on the pound, if they're negative, I would expect a big drop. So again, this sort of stuff isn't necessarily taken into account on the scorecarding system, but you need to have that in the back of your mind as to what's happening and what the IMF's predictions are. The interesting thing is they're not predicting anybody to have a recession apart from us in the UK. Everybody else is not going to go into recession in 2023. Yeah. So all these soft landings and everything that they keep talking about, it does actually seem like that might happen. We might actually get out of a recession. We might survive this thing. If that is the case, we need to be looking again at potential bull markets. Yeah. So, and obviously we can see signs of bullishness coming in. We've taken out the lows on the S&P. We've pushed up back into that high there. Yeah. We've pulled back. We're pushing up again. So there is potential here for a market structure shift. If that happens and institutions see all the economic growth starting, we've had good numbers from earnings, we could start to get back into a bull market. If that's the case, it'd be lovely because I'd be able to turn my EA on that just basically trades long on the S&P. But I want to see we need to get out of this. We need to go green. I want to see us go green and stay green. We've had multiple attempts at it in the last year. Every single one has failed. Yeah, we popped up, lost, popped up, lost, popped up. Now, what you normally see is a couple of legs down, one up, a couple of legs down, one up, a couple of legs down. We haven't had that second leg down. If that high breaks, I think we are potentially back in a bull market. That's the first indication this morning I had that recession might be over, the IMF's new report. So not over, just not happening. Yeah, this has all been happening because we're forecasting recession. Recession's not happening. Why is the stock market going to be bearish? Shouldn't be, should be bullish. What does that mean for the US dollar? Collapse. So this could all flip on its head in the next couple of weeks, really. We'll see. But the market certainly seems to be a little bit more bullish, doesn't it? We can see that from the DAX and the FTSE making new all-time highs. Not all-time highs, but new highs from COVID. Look at us. This is why we are a 0.6 and everybody else is a positive. Yeah, we really did get COVID wrong, didn't we? Not just got it wrong, spectacularly wrong. Anyway. Right, so yeah, so we'll see what happens, but pound I would say is definitely a short moving forward. So pound New Zealand I'm short, pound US I'm short. Euro US is another good short. Aussie New Zealand is another good short. I got out of Aussie New Zealand yesterday. I'm only not getting back into it because I'm so close to getting this account over the line. I don't want to get into something like I have done with oil. Why did I take that yesterday? That was a silly one. I don't want to get back into this and then it go into like 0.5% of drawdown or something, and then I've got 8.5 grand in there, and I just can't get this thing off. So I'm just starting to reduce the positions that I've got on, but I like it short still. Aussie New Zealand, I still do think it's a nice short. I'm not sure this pullback's over. Obviously, when you can see where I got in, I've been in here and I've been in here and out here. So as long as we're getting market structure, whether you get in short and you get it wrong, as long as you're getting in regularly, you'll get out. So it's just trying to find where this is going to stop. We got a 50% retracement, which is what we're reacting off at the moment. But that 50% retracement came off of a big bull move. Yeah. So there's a massive propulsion gap formed here where we've got potential for a lot of buyers to step in that bought this up and made this new high. So it may warrant another leg up. But the market is short at the moment. So if you look at the positioning, we've got COT short on it. We've got retail long, hence it's coming down at the moment, which is why I was shorting it. And the fundamentals basically are ever so slightly bearish towards the Aussie. So yeah, I like it as a short. We might, as I say, though, get another leg up. And if that's the case, you've got roughly a 2 ADR, 2.5 ADR move potentially up to the upside, maybe more, maybe a 3 ADR move. But, just getting in, scaling in, waiting for that next leg down to get out. But it could just obviously go from there. So it's a good looking pullback. But we'll see. So that's a nice short. I'm just let me look at the DAX. I'm not sure what I want to do with the DAX this morning. ORB, it was just too whippy this morning for that. Unfortunately, I just got stopped out of that as well. Big movements today. My stops have just been too tight on everything, ever so slightly too tight on everything this morning. 60-point move to the downside. I'm going short one more. We just rebroken the low pre-market. If we pop that, we've got a chance of getting a nice little flush out the bottom there. There we go. There's the flush. So we need to see if this holds. So we've had our next leg down in. We'll probably pull back and contract a little bit. And then I would suspect we will push down to this sort of level at yesterday's low. Odax, why do you do me like you do? Break even and then run, same as yesterday. Yeah, well, trading, frustration. I've been done twice this morning. There's nothing worse than getting it right and getting the direction and getting the stop wrong. It's just frustrating, isn't it? So short, stopped out by probably 1 pip, maybe 2 pips. Collapse. Short, stopped out. Actually, that would have been a bigger stop out, but 1 or 2 pips and then a little bit more. Yeah, nothing you can do. It's just life, unfortunately. Well, hopefully this is going to now collapse. So I'm targeting last week's low, but yesterday's low is obviously a key level. So when we get down to here, I will tighten up if we get down to there. But that's your target. Yesterday's low is obviously the first target. Last week's low will be the second target. That's ADR. I don't think we're going to get down to ADR in one session. You never know. Might do. Stranger things have happened. This is the Forex market. Putin could come out and say something in a minute, then we'll move. Yeah, so like I was in New Zealand, you can see the other sells here. US dollar CAD is the biggest buy at the moment. 5 out of 7 of that is retail and COT long. So as I said, US dollar CAD, I got out of that one this morning. I'm out too soon. Oh God, I'm really out too soon, aren't I? So yeah, I got out of that one this morning. Those two. So yeah, that's just about to hit TP. Look, there you go. There's my TP. ADR. So there's a lot of buying on the US, interestingly, ahead of FOMC. So they're buying it up this morning. But again, looking at sentiment, yeah, US dollar CAD. 71% of the market is short on the US dollar CAD at the moment. Yeah. And that's why I started buying it here and down here. Because if 71% of the market is short on this thing, their liquidity is sitting there and there. So the market is getting it. As soon as they all stop out and go, actually, let's go long on this pullback, their liquidity will be there. Then the market will come back down again. So yeah, that's still a nice long. It's played out, so I'm out. I shall wait for a pullback and get in on that, but I don't think I'm going to get another entry on it this week necessarily, because obviously we've got FOMC and endless amounts of news. Obviously, as well, if you are still in on US dollar CAD, don't forget 1:30. We've got the GDP figures, so we're going to get some CAD movement this afternoon. So just be careful of that one. The yens, as I say, I keep flicking over the yens. I just don't have any bias on the yen at the moment. I want to be shorting it, but I don't like going against COT, and COT are short. So I say I want to be shorting yen pairs. What I mean by that is New Zealand dollar yen. I want to be hitting the short button because COT is short. It means they are that way on it, which means actually the bias is to buy New Zealand dollar yen from a COT perspective. So I'm out of sync with COT just because I just don't like it. I just think the Japanese will intervene and push the yen. And I'm not quite sure why COT is actually so aggressively short on it, but you know. So these are all officially buys. If you want to stick with them, stick with them. What happened to that New Zealand dollar yen that I posted last week? Let's have a look at that. Yeah, it's playing out, isn't it? So I posted this last week, and I got into it last week, didn't I? When did I get in? And where did I get out? Oh my God, where did I get in and out of that? When did I get out of that? Oh, I don't know. I got in and out of it last week. I can't remember what it was. Anyway, so we had the propulsion move. We pulled up, started selling. We came back up, retested the initial move 3 times. That's where I got in, wasn't it? Here. So I got in on the reversal alert here. We pushed down. I broke even the position, or I put a trailer on it, one or the other, and I got out somewhere in here. It came back up and retested it again and gone down. So, but since that move, since I entered the position, we pushed down around about sort of 30-40% retracement on the push. And since then, we've just gone sideways for 5 days. It is pushing down now. So if you did get in this and you're still holding it, you're still in it. But you see what I mean? If you long this in line with COT at the moment, you need to be longing it down here somewhere, anywhere around these sorts of levels. However, if the Japanese decide to put in an intervention move, when you're down here, you're in big trouble, aren't you? And as we've seen, it's not necessarily sure that you're actually going to get that move, that return to origin on it. So I'm just not 100% on it at the moment. I just don't want to trade it. I think there's plenty of other things out there we can trade that aren't quite as dangerous. Journeyman unemployment has just come out as a minus 22 on a forecast of 5. So that's negative euro, which is unfortunately positive DAX. Oh, no, sorry. Other way around, isn't it? Because it's unemployment. Yeah, sorry, other way around, because they're expecting it to be 5k and there was actually 22k less, 27k less. So that's negative DAX, positive euro. Let's see if that helps. Where was I? Yeah, so all of those. So yen's up to you, really. It's what your view is on whether the Japanese are going to intervene. If you're trading it short term, if you're trading intraday, I would do nothing but pay attention to the combined sentiment. So Aussie dollar yen long, euro yen long, pound yen short, but you see the bias. There's nothing. Again, I think most people are feeling the same way as me at the moment, really confused as what to do with it. So there's not actually a lot of bias either way. It's a very wide sideways thing at the moment, and it's quite hard to trade. The only things I'd be interested in are longs and shorts at the highs and lows with stops, and they're either going to work out or they're not, and that's not my favorite way of trading. So I'm just not really particularly interested in trading those. So US dollar CAD is a good one. Euro Swiss, I have the EA on Euro Swiss and New Zealand dollar CAD for longs. I'm waiting for Euro Swiss to get extended to the downside, and I'm waiting for New Zealand dollar CAD to get extended to the downside on the hourly. No joy. Yeah, we're just sideways on both of these. So I haven't found a way to get in, apart from obviously, that's the sentiment play that I did previously. Since I got out, it's just not giving me any way in. Oh, bloody hell. DAX. Come on, DAX. Wake up. I think I might leave this. This is my last trade on the DAX. If this one stops out, I'm not playing anymore today. It was all screwed up by this move this morning. Market's too volatile today. It's too whippy. We've got way too big candle movements. You need to be trading this on 15-minute time frame or higher really at the moment to have any chance of staying in a trade. It's all too big. Look, even on a 15-minute, yeah. Look at the size of these. It's just there's too much wicking to get in today and hold it. As you can see, I'm just getting tiny losses constantly. So there's your bias scorecards. Combined sentiment this morning is pretty much the same as yesterday. The pound New Zealand is now relegated a little bit. So Aussie dollar, New Zealand dollar, you've got cotton side short with retail who are all long on it, hence us going short. So Aussie New Zealand is a good intraday short. So you had a reversal there this morning. Hasn't gone, well, obviously it did come down in Asia, but so if you want to trade intraday, obviously M5 RSI extensions to the upside or M15 RSI extensions to the upside, hourly RSI extensions to the upside, looking for short opportunities. You've got CAD Swiss, who they are. I mean, obviously, you know, I've been in CAD Swiss for, how long have I been in this thing now? 1, 2, 3, 4, 5, 6, 7, 8 days. These are the moves that we take our profits on, then pull back, enter again, pushed out. It's just stuck at the moment. And I think this is obviously just waiting for this Canadian dollar. So I'm at break-even point on it. And I'm really, I just had an RSI low on oil. That's not good news. That's not bad. Yeah, so this CAD Swiss, I can't get out of this thing. It's just not giving me a move. This afternoon, we're going to get a move on the CAD. I'm just worried on the IMF predictions. I'm worried that CAD is going to come out with a positive GDP number. And if it does, I get the feeling we might get a pump on it, which would be unfortunate. But if I can get this back down here this afternoon, before the news comes out. So literally 2 hours drop from here I need really. I have got an out which gets me out of the entire position ahead of the news. And I had it this morning as well. You can see it pushed down to here this morning. I had an out down here, but it was only about 0.25%. And, you know, after sitting in this thing for so long, I have taken profit off of it, obviously. I mean, these moves that I got out of here and here, these were only partial exits on these ones. So I'm in profit on it overall, but only by a little bit. So I kind of want to make some money on it. However, I also would rather not be sitting in this if the CAD is going to actually push off the GDP this afternoon. And we don't know what it's going to do. So I'm watching it closely this morning with a view to what I will probably do is if it gives me this TP, what I will probably do is I will close half of that off and I will close half of that off. That then reduces my exposure to less than a lot. And if it does push, I will be able to get in and out of it fairly easily after it's pushed, because I'll only have one lot running to go into drawdown. So if I can, in hindsight, that's what I should have really done this morning. If it gives me that this morning, that's what I'll do. I'll do drawdown control on it. And then obviously if the CAD does come out negative, I'll be out the whole thing down there and don't have to worry about it anyway. So don't hold up much hope for this DAX this morning. We may get a rotation day on this today. Tom, sorry, maybe understood wrong. Did you say the news now is negative for the DAX? No, sorry. It's yeah, well, it should be because it was positive euro. So with the this is obviously euro driven, the DAX, because it's priced in euro. So if we get positive news from the European zone, that tends to drive the euro up, and the indices tends to do the opposite to what the euro does. But it all depends on whether we've got any euro movement, doesn't it? So last 15 minutes since that news came out, we've had no real movement. A little bit more on the CAD. Yeah, so it's a bit bullish euro. So I would expect the DAX to be struggling to get higher, which it is. US dollar's nice and strong this morning. Still, look at that US dollar CAD, nearly ADR. Pound US dollar should be coming down nicely then. Excellent. Right. So yeah, so you got CAD Swiss. Did I look at the, yeah, so CAD Swiss, the reason for the CAD Swiss is obviously this, I mean, the absolutely huge move on that CAD Swiss. If we look at the combined sentiment on the historical on the CAD Swiss, things just they've been long on it for ages. CAD. So there's your CAD Swiss. Look, they've been sitting up at 97 down to 78. So between 80 and 95, basically. Sorry, one for a couple of weeks now. Yeah. So what we've had is stop runs on the CAD Swiss constantly, over and over and over and over again. But they've been so small, it's basically just been grinding, waiting for that one to come. So that's why I am short the CAD Swiss. I'm waiting for the next profit take move, and could well come off of the CAD this afternoon, couldn't it? If CAD figures come out at 0.1, which is the expectation, they might tank the CAD temporarily, because everybody's long on it, aren't they? Everybody's long on the CAD, so CAD Swiss. So where is their liquidity sitting? Yeah, there. Yeah, everybody's long. If they need, and this is the if the market needs liquidity, it will need to go and get it. Where would it find it? There, and there. That's why I'm short, because everybody else is going that way. The market knows where all their stops are. So we will see. So yeah, so that's still a massive short. Sorry, excuse me. The 25th in the morning here, 3 o'clock in the morning on the 25th. Yeah, is where that move happened. Yeah. So this shows you them doing the stop hunt. Yeah, this chart, this historical, this move, bang, shows you them doing that liquidity run. Because what happened as this thing started collapsing, they saw the market driving down. Yeah, retail crowd saw the market driving down. What did they do? They bought the crap out of it. Yeah. They were 80% long. By the time that 2 hours was over, they were 94% long. Yeah. Everybody's buying the dips, putting their liquidity in the market. Yeah. And they're still in it. If you were buying it here, it's only moved that. If you think about as a retail trader, when you're buying here, your stop's going to be somewhere around here, isn't it? It's only moved that far. You're probably not out yet, are you? And what's happening is it's coming down against you. So, it's not far to go. It's an ADR, yeah? It's only one ADR. Nearly 75% of the time, the market is able to move that far in a day. It's easily within reach on a news event, isn't it? Frank went with US 30 on the pre-open range, just under 1%. Frank, why do you keep trading US indices in the Frankfurt session? You're obviously doing well with it because you keep doing it. But this is, I mean, today is actually a little bit of a different example. But, you know, normally we have the DAX moving the most. Today, actually, you're right. Yeah, that was the one, wasn't it? Look, that didn't pause much at all, did it, on the way down? Look at the DAX. It's been nasty today, hasn't it? Well done. Good trade. So there's your 15. You took the pre-15, did you? Yeah, so you got in there. You're down at support now. But normally you would trade European indices on the European session and US indices on the US session. I haven't done any testing on these guys at Frankfurt Open at all. So it's something to test. But so I'm just going to add on to my DAX. So we're rejecting. Just going to wait for this candle to close. Why have I not got a candle timer on here? That for it either. What do I normally have this as? Can't remember. X. Something like that, I think, isn't it? A bit more. Oh, wrong offset. Wake up. Do I want to add to a loser? Not at the moment. I was going to add to that, but we've closed we've closed inside the previous body. It is an outside bar. Yeah, so it's an outside bar of the previous candle. Yeah, which is non-directional. So if that had closed as a bearish engulfing, I would have gone with a pending under the lows there and grabbed one down to the low and then let that one run. But that didn't close favorably at all. So yeah, US, watch your Dow. Yeah, you're at support, Frank. I would probably consider either locking in or taking. That's not a very good propulsion gap anyway. So yeah, but that is support. However, if this breaks, you've got clear air literally down to ADR today. There's not a lot I can see there really where you're going to get stuck. There's a few points that may act as temporary support. I mean, that was invalidated. That was invalidated. That's really where you're headed, isn't it? If we're going south today, obviously, that's the question. God, I really wish I had taken oil yesterday. Just remind me next time I want to trade oil, the same way as when next time I want to trade gold. Don't do it. Dances. Trading indices in their respective sessions would bring about what advantage? Volume, yeah. So think about what's happening at the moment with the US indices. Yeah. Think of it like a shop, right? Shop's closed. A petrol station or a garage or a filling station. I don't know, whatever you want to call it, gas station. Don't know which country you're in. But in the UK, what happens at filling stations, not that I've been to one because I've got an electric car, but is between 9 and 5 or 9 and 9, for example, you can go in and buy what you like and do what the hell you like. After that, there's a little window at night you have to go up to and ask the bloke for stuff. With the US indices, this is what's called the Globex session, which is where the CME allows you to trade stocks electronically, but the market is shut. The New York Stock Exchange is closed. The New York Stock Exchange opens at 9:30 in the morning in the US, which is 2:30 UK time. So you're from Mongolia, so you probably just use kegs. I don't know. I'm sure you've got petrol stations. You've got really good internet as well, so you must have. But basically what you're doing is you're trading at the night window where there's not many people trading. When that bell opens, right, so the institutions are not trading here. The only thing trading here are retail, smaller investors, and algorithms, which is why they, this is the Globex session is typically the accumulation. Yeah, so if you look at this, right, on a chart, Globex, New York Open, Globex, New York Open. Sometimes you have a trend on the Globex. The reason this happens, is not what normally happens, but the reason this is happening at the moment is because we're in earnings fortnight. So what you're seeing is a lot of pre-market and post-market trades based on earnings. So that's why we're getting bigger moves. But normally, on a normal day-to-day basis, this thing is really, really quiet. Yeah. So when you're trying to trade volatility and momentum, and something doesn't have volatility and momentum, it's very difficult to trade. So the DAX opens at 8 a.m. UK, and the European, and so does London, basically, pretty much. So you find the FTSE and the DAX are hugely volatile because the bell rings, if you like, in Europe, and those indices go mental. Yeah. However, stocks are often purchased in sector buys. So a institution will buy a sector of stocks. So they will say, we need to buy pharmaceutical, we need to sell motor, we need to buy tech or whatever. There will be tech stocks sitting in the S&P, the Frankfurt, the DAX, and the FTSE. So if someone wants to do a sector purchase, they will typically wait until the Frankfurt Exchange is open or the London Stock Exchange is open before they make their sector purchase, which will also happen on the Globex market in the S&P, the NASDAQ, or the Dow Jones, or the Russell 2000. That's why you get movement in sync, typically, with what the DAX is doing, because they are buying and selling sectors. However, at this time of year, which happens 4 times a year when we've got earnings fortnight, you get individual movement on these indices. But that's why you trade the instrument that is moving at the open of the market. Yeah. So I always trade the NASDAQ and the Dow in New York Open, and I trade the DAX during Frankfurt, or the FTSE. You could trade as well. I personally don't trade the FTSE. I find the FTSE too slow. But it's I don't know. I just don't get on with the FTSE. But you can trade that as well. Today it's about. I mean, look, and again, this is something that you can't know at the open. What's the best thing to trade is impossible to tell, because today the FTSE was what you wanted to be on, not the DAX. I got on the DAX, didn't work. Other days I'll get on the DAX and the DAX will collapse like that and the FTSE will go like that. So that day you'd be going, oh, I wish I'd have traded the DAX. Doesn't matter. Some days you're going to get the instrument that moves, some days you're not. There's nothing you can do about it. You can't predict what's going to move and when it's going to move. If you could, as I say, I keep saying over and over again, if I knew that, I would be a billionaire sitting on a yacht and I wouldn't be talking to you now. I'm not. I don't have a yacht, although I did used to have a sailing boat. A dinghy, I must add, which cost me 700 quid. Not a super yacht like in Below Deck. But yeah. Just missed my entry. I was going to take another short there, but I'll leave it for the minute. I'm not that convinced by this DAX this morning. At the moment, unfortunately, it's not instilling me with confidence. Okay, so CAD Swiss, we've got a nice bear move going on. So like I said, news is coming out at 1:30 this afternoon for GDP. So I've got what, 9:30, 10:30, 11:30, 12:30, 1:30, 4 hours. So I've got 4 hours basically, ideally, to get this TP hit. If I can get this TP hit, I'm going to do some drawdown control and just scale out a little bit of these positions just in case. So, and this is, I've said it many times before, haven't I? When you're running evaluations, whether you pass or fail an evaluation is really down to the market. If the news comes out as a positive or negative, it doesn't really matter. What matters is where they take this market when that news comes out. That is a pass. That is a fail. Not a fail. That is a pass. That is going into drawdown and not passing this morning, isn't it? That's basically the difference. Yeah. You don't have control over anything when you're trading. The only thing you have control over is when you press the buy and the sell button. But what happens after that moment is totally in the lap of the gods. Just because something hits a line does not mean it's going to get to where you want it to go. It can move down from that line, but it can also move back up and do this. And then it can do that. Yeah. And this is what I keep saying about strike rate. There is no such thing as a strike rate on a market reversal alert at resistance, because the strike rate is determined by your stop and TP positioning, not by the indicator signal, the level, or the trade entry. This is the thing, and that is the thing that creates the strike rate. The entry is irrelevant. The entry is always going to happen. Those two things determine whether or not you're going to have a minus or a plus strike rate. I can get a 99% strike rate if I target 1 pip with a 1,000 pip stop loss, because the natural movement of the market means virtually always will go in my direction at some point to get me out. If I've got a 99% strike rate with that, does it make me a good trader? No, because I'm losing 1,000 and I'm making 999. I'm a negative trader, minus commission and minus swap. It's food for thought. Oil. If anybody's got anything else they want to look at, let me know. I'm not going to cover anything else today because I was going to go through all the sentiment, but there's not much point. Aussie dollar Swiss is probably a nice little buy. These are your main buys. New Zealand dollar CAD, US dollar CAD. I'm on both of those when they move. Euro Swiss, I'm on when it moves. Euro CAD's the only other one. So take your pick, basically. Just want to get in when we get some market structure breaks to the upside on those. Dances. I was just going to read your comment. You just retraced it. Wouldn't you focus on the setup rather than the session? Yeah, I do trade. Yeah, 100%. But there's no setups outside of the session as far as I'm concerned. Go and do an EA. If you, right, a good test for you, go and get an EA that trades price action. Actually, you can use the Price Action Toolkit for this. I've got a test still running, so I can't. 2 hours left on that. But if you get the Price Action Toolkit, for example, this auto trades price action patterns for you. Yeah. And you can set the times that it's going to trade. Go and trade setups like candlestick patterns, like strong close candles, bullish and bearish engulfings, right? Yeah, you say about focusing on the setup rather than the session. The strike rate on bullish engulfings working in Globex or pre-market before Frankfurt Open on the DAX is terrible. The strike rate on them working when the bell has gone is way, 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 way better. Yeah. So you need to focus on setups. Yeah. Opening range break, for example, as well as when it happens. The when is just as important as the what. Price action, PASR, right? Price action at support and resistance. Market reversal alerts that happen at previous resistance levels are way better when they happen in London or New York than they are in Asia, because 75% of all volume in the Forex markets goes through those sessions. So what you're seeing at resistance in Asia is accumulation, and accumulation will also have market structure breaks inside of it, but they're not anywhere near as effective as that. So that's the setup. The timing of it in this case was end of London, start of New York. Look at Asia. Time is very, very important for confirming the actual price action. If you get a candle that moves up like that and down like that in Asia, it's part of an accumulation. If you get a candle that moves up and then down like that in London, that hits a previous resistance, that is limit order triggers by speculative buyers during the active session where all the volatility is happening. That's going to work way better than the one there. And this is exactly what you see. Yeah, look at all this movement. Look at the size of these candles. Look at the size of these candles. Much more important you trade here than here, and safer, because you've got market participants on your side. God. Oil's thinking about potentially making a move here. Look. So we haven't quite got the reversal alert on M5, but we have paused that downward movement for the moment. So if we get a reversal alert here, this might actually be a good spot for an entry. It's a little bit close. Do I want to risk this? I'm stuck in a quandary with oil. With the CAD this afternoon, basically, whatever happens, I'm banking that regardless before the news. Even if it's only $200, I'm banking it 0.25%. Not getting any luck at all this morning, am I? Right, I'm just going to follow this DAX through. So basically, I'm looking for yesterday's low, really. I think I'm not going to push it. This has got no legs today at all, this DAX. It's just not got any legs. So yesterday's low or bust, basically. I'm either going to stop out on that, or it's going to break this low and we're going to get a push down to yesterday's low. So that's really the move on the DAX that I'm looking for. No, cancel that. I'm going to take another sell stop underneath that candle, another breakout there with a 40-point trailer, a 40-point stop. So either I'm going to stop out when we break those highs. So if we invalidate those highs, market structure is basically looking like it wants to just either rotate today or doesn't want to go short. So I'm out. If we break this low, I'm going to add a second and I'm going to bring the stops down and see if I can get that run down to yesterday's low with two positions. Those two positions combined at yesterday's low will be around about $1,300. Currently sitting in 869. So it won't get me over the line, but it will get me pretty close. And then it will basically be coming down to the Canadian dollar this afternoon before the market opens. So that's the plan, basically, to try and pass evaluation, is just to get down to here with these two positions. If it lets me do that, happy days. Actually, it's not even going to be to $1,300, is it? It's going to be, yeah, because I've taken smaller positions, haven't I? It's only going to be $700. So basically, the DAX move will get me over the line, won't it? Pretty much. So that'll be target hit. So then I've just got to deal with that. And the CAD can do that potentially this afternoon or not. I could get in more aggressively, but I just don't want to risk it. There's no point in, when you're this close to passing an evaluation, there's no point in risking stupid. And this is what people do. You know, I could easily go short now with 1% and pass this on this candle, or I could lose 1% and knock myself back by 1%, get cross, and then think, right, I'm going to do it again. You do that 4 times, you've just blown the evaluation, haven't you? You just got to keep it small, keep it within good risk parameters. It's what kills everybody in evaluations. This is what these timings do for you. These targets do. They make you focus on nothing but getting across the line. You blinker yourself to process. That's why people get funded accounts and blow them virtually within days, because they're so blinkered on passing evaluation and getting 8% done in 5 days that they don't realize that's not sustainable. Just can't do it. I think it's probably 3 people in the world that I know of that could possibly maybe make 3 or 5% a day consistently on their account. I'm not quite sure why they haven't been snapped up by multi-billionaires yet. Right, I'll leave it there to this morning. Anything you need, let me know. I'll be in the Telegram group. I'll update on the trades via the socials and Telegram. But you can see what I've got on. Oil, I'm going to think about. I might take this, 3 minutes. If I get a reverse alert here on oil, what I'm going to do is, because of where we are, I'm going to take another oil long on this, right? So I'm expecting this to become support. Yeah, this is a good support level. It's been respected multiple times in the past. Whoops. So if this is going to give us a reversal alert in the next couple of minutes, I'm going to take another long here. It's a little bit too tight on that one. Normally I wouldn't get in quite so tight. It's less than 130 or 113 pips away. So it's a bit tight. However, what I'm going to do is I'm going to put a stop on it down here, not there, somewhere down here, in case this thing wants to do an ADR run. Because if it drops out the bottom of this, it's coming here, which is pretty much ADR. So I don't want to, there's no point in me going into drawdown on that. I'll add again there. So I'm going to use a stop on it. But what this position will do is it will bring my average I mean, I'm within an ADR, obviously, at the moment. But what it'll do is it'll bring my average back down towards the top of the London session within this propulsion move. So if I need to get out today to get the evaluation over the line, getting in now here will make that much, much easier. But I mean, the whole day is hinging on the CAD, basically. So I'm going to take another one on that if we get a reverse alert. If we don't get a reverse alert and we continue accumulating, I'll obviously wait and see what happens. But looks like a good spot. We'll see. Okay, I'll leave it there. I'll be back at 2:20 this afternoon. Anything you need, come in the Telegram group. I'll be in there. I'm going to be working on the sentiment EA today, and there's a couple of EAs people have sent me over they want built, which I'm going to see if I can knock together quickly. I haven't really looked at how complex they are, but yeah, I'm going to try and get the sentiment EA a bit more progressed so I can start live testing that. So, yeah, if we don't get it over the line this morning, hopefully the Nasdaq will this afternoon. Although that's having a bit of a huge day already, isn't it? So, all right, guys, have a good morning. Hopefully it's profitable. If you're on the CAD, good luck at 1:30. Hopefully that moves nicely, and we'll be back for the New York session at 2:20 and see how we go there. All right, have a good morning, and I will see you later.